Bismillahirrahmanirrahim. I'm Abdul Adamu from Data Analytica. In this lecture, I'm going to show us how you can invest in stock. Investing in stock is one of the most difficult decisions for most of our investors. If you are thinking or contemplating on investing in the stock market, this guide will help you using a 5-step. The first impression I would like to tell you that most people get about the stock market is that stock market and stock investing is not gambling. Investing in the stock market, you have to follow certain rules, and one of the basic rules of investment, as laid down by Warren Buffett, the oracle of Omaha, is that rule number 1, don't lose money, and rule number 2 is that don't forget this rule number 1. So the rule number 1 is all about investing, not about speculating. That is why we said stock investing is not gambling. Stock investment, if done well, is one of the most effective ways to build long-term wealth. For example, if you invest with Zenith Bank in 2012, that is 10 years ago, the share price was 14 naira 60 kobo. 10 years after, as at today, the share price is 25 naira. That means there is a 41.6% increase in the investment. This is aside from the dividends that you have received over those years. So this is just capital gain. If we look at shares of Apple, it was $20.89 10 years ago, April 2012. As at today, it is $163.92. That is about 685% increase. This is aside the dividend that the holder have received also. If you look at Tesla, 10 years ago, it was $6.63. 10 years after, as at today, it is $989.03. That is a whopping increase of 14,817% increase. This is capital gain. This is aside dividend that they might have collected. So investing in stock, if you have done it for a long period, it is one of the best way of building a long-term wealth. So how do we start? So there are basically 3 ways to invest in stock. But before then, you have to determine whether you are going to be an active investor or a passive investor. One way of investing in stock is by investing in individual stocks. Now, when you choose to invest in individual stock, then that means you are going to be an active investor, because this requires a lot of time. Then you have to be analytical, so that you study the trend and patterns to do analysis to know which stock firm to buy and which not to buy. And it will also require research also for you to do research. So if you want to buy shares of individual company, you can see the stock, largest Nigerian stock by revenue, Eco Transnational, Dangote, Zenith. That means you need to study each of these stock one by one to buy them. Another way to invest in stock is by investing in index fund. So these are funds that track stock index, like the exchange traded fund or mutual funds. So we have mutual funds that are actively managed or passively managed. But for exchange traded fund, you like Vertiva Griffin 30 that tracks 30 most capitalized stocks on the Nigerian Stock Exchange. So instead of buying the individual stock, you can decide to buy the ETF. So that means you are invested in the index fund. So the advantage with this is that there is a lower cost, and you are guaranteed to match the long-term performance of the underlying index of the underlying stock. So for instance, S&P 500 has produced total return of about 10% annualized return over a period of time. So these are some index funds, foreign index fund, S&P 500 index fund, Barclays, Dow Jones, Nasdaq Composite. So, and these are their year-to-date return. So the last way you can invest is by using robo-advisors. These robo-advisors are like robots. They invest your money on your behalf, and they consider your age, risk tolerance, and your investing objectives, and they optimize your tax efficiency. So they are unbiased. They give you unbiased advice. Their fees are low. They track all this stock online, and there are no hidden charges. So this one is robot that can buy this on your behalf. So these are common for people trading in cryptocurrency. They are common. We use them a lot to do trading in cryptocurrency. But for stock in Nigeria, I don't have an idea of any robo advisor in Nigeria. But in foreign country like in the US, there are so many robo advisors. For example, we have the Wealthfront, we have Betterment, we have MWA Finance, and a whole lot of them. So you can Google them to see the kind of services they provide. So in Nigeria, they are still working on granting licenses to people to create robo advisor so that they meet the set guidelines. So the second step is, how much do you invest in stock? Before we talked about how much you invest in stock, let's talk about the fund that you don't need to invest in stock. Number one is the short-term fund, money that you need within the next 5 years. You cannot invest in stock because stock is for long-term purposes. Example, we can talk about rent, money for home keeping, like your rent, money for education, your money for feeding, and also your mortgage payment. The fund you need to pay up your mortgage, either for down payment or the subsequent payment. You don't need to invest it in stock because investment in stock can be volatile at times. That is why it is for long term. Then the money you are keeping to go on vacation with, maybe the period that you need to go for the vacation, the stock price will be down. So those kind of money, we don't invest them in stock. Then your emergency fund, maybe money you have kept for in case of medical emergency and other emergency, don't invest them in stock. And also the money that you keep to pay off your debt should not be invested in stock. Then after you have taken care of that, so any other money you have is what we call the investable income. Those money now can be invested in stock. So we have a long-term money or proceed from other investment. You have made other investment, and you have proceed from them. You can decide to invest them in stock. Then savings from your earnings. So from your earnings, you decided to be making some savings from it. You can decide to invest that money in stock. Then gifts. So maybe you are not expecting and somebody gave you some cash gift. You can decide to invest them in stock. So after that, how much do you invest? How do you allocate your asset? So there are certain factors you consider for asset allocation. One is age. How old are you? The younger you are, the better, because you have a whole lot of time ahead of you to invest in stock. The older, you might consider investing little amount in the stock. Then your risk tolerance. How do you tolerate risk? There are many people that are risk averse, and there are those that like risk. So this is a very big factor when you are allocating your asset also in stock. And what is your investment objective? So some investment objective may not be for long term In that case, investing the amount in the stock might not be appropriate way to meet those objectives. So once you have considered these three factors, then how much do you allocate in stock? So the rule of thumb is that we use the 110 minus your age. Although there are arguments that this is already archaic, but it's a good way to start. So if you have a certain amount of money, for instance, and you are, for example, 40 years, what percent of that money should you allocate? So you say 110 minus 40, that is 70%. So you allocate 70% of that amount to stock. Then the other 30% you can now invest them in maybe debt instrument like bonds and certificate of deposit. So the risk reduces as you get older. It is not sacrosanct. You can adjust it up or down based on your risk tolerance. The third step is, once you have decided how much you invest in stock, you open an investment account, either a standard brokerage account or the individual retirement savings account. So we have different types. For if you want to invest in foreign stock as well as some local stock in Nigeria, for instance, we have some platform which you can open this account with. We have like Trove, we have RiseVet, we have Bamboo, and we have Shaka. Personally, I'm using Trove and Bamboo, and they are working well. They are very, very liquid. Once you sell stock, at least it will take 5 working days, you get your cash back. Then for local stock, you can download the app with Free Investor. Personally, I'm using Free Investor, their app, to do my investment in stock. So there is APT Security, Stanbic IBTC Broking. They have app. Most of the stock brokers in Nigeria have app, or you can approach a stock broker. So to use this app, there are certain factors you should consider: whether it is easy to open, and there are requirements for KYC. KYC means know your customer. They will ask you to upload your picture, provide your BVN and all those information. Whether to fund your account, whether it is easy or not, and how much are they charging you. You try to compare their cost, and whether they have other features. Some of the apps have other features like educational tools. Some send you investment research. Then whether they have the ability for you to trade foreign stock, and whether they have physical branch network. When you have issues, you can approach their branches to settle the issues, and whether the app are user friendly or not, and whether the functionality of the broker's trading platform, whether it's functioning well or not also. So the fourth step is, which stock should you buy? Whichever stock you are deciding to buy, you should bear in mind that you have to diversify your portfolio. So by diversifying portfolio, we mean you should not invest in one sector. If you want to buy stock, don't buy stock of banking firm only. You buy stock of banking firm, buy stock of construction firm, so that if anything happen to the industry, to the sector, if you are buying only in that sector, it will affect definitely your investment. So you diversify your portfolio. But as a novice investor, this should not be things you should bother about for now. By the time you understand the investment in stock, you can try to learn about the diversification well. Also, invest only in businesses you understand. So do not just throw your money at any stock that you see. Make sure you understand any business you are trying to invest your money in. Then avoid stock that are highly volatile, stock that the price go up and down frequently, avoid those kind of stock until you get to know investing in stock very well. Also, avoid penny stock. Don't buy stock because their prices are so low. Those kind of stock are what we call penny stock. They can affect your investment at any time. Then learn the basics, metrics, and the concept of evaluating stock. So you should at least know the small things about stock. You learn them and how to evaluate them before you buy. So the last step is you continue investing. Be consistent with your investment. You can use dollar cost averaging, whereby consistently, maybe even if it's from your monthly saving, you can be investing it in the stock. So if the price goes up and you buy, next time you are buying and the price is down, it will smoothen out your prices. That is what we call dollar cost averaging. Then finally, I'll tell you the biggest secret of investing, as told by Warren Buffett again. You should buy shares of great companies at reasonable prices and hold on to it for as long as it remains great and produces excellent investment. This will produce excellent investment return later. So most of these resources, I got the idea also from the monthly phone. Thank you for listening.